Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 154, published June 13th, 2025, titled More Top ESG ETFs and Companies. So, this podcast is presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. Additionally, please visit this podcast webpage for links to the articles and additional company and stock information. I have a great crop of 16, maybe 17 articles for you in this podcast. My first review article appeared on a favorite investor website, Morningstar.com. It's titled 5 Top ESG ETFs for U.S. Investors and is written by Hannah Hamal. Here are some brief comments on each ETF from Ms. Hamal. To find these 174 sustainable ETFs, we applied multiple screens across all exchange-traded funds in Morningstar's database, selecting only equity investments that are both domiciled in the United States and traded on a United States exchange. Next, we filtered the remaining ETFs down to only those Morningstar designate as an ESG intentional investment overall. And you can find out more about that with a link there. All fund sizes are as of June 2nd, 2025. Starting with the first fund, iShares ESG Aware MSCI USA ETF. Morningstar category, large blend. Morningstar medalist rating, silver. Morningstar ESG risk rating, above average. Analyst for the ETF is Lan An Tran. iShares ESG Aware MSCI USA ETF tops out screen with $13.37 billion in assets under management. Incepted in December 2016, the fund has returned 0.48% year to date, trailing a 1.06% return for the S&P and a 0.86% return for the Morningstar U.S. Market Index in 2025. Over the past 3 years, the fund has posted a 13.59% annualized return, underperforming the S&P 500 at 14.41% and the Morningstar U.S. Market Index at 14.05%. This passively managed fund tracks the MSCI USA Extended ESG Focus Index. Number 2, Vanguard ESG US Stock ETF. Morningstar category, large blend. Morningstar medalist rating, silver. Morningstar ESG risk rating, above average. Again, analyst is Lan and Tran. The only ETF offered by a provider other than iShares that places among our screen's 5 largest vehicles is the $10.16 billion Vanguard ESG US Stock ETF. The silver Morningstar medalist was launched in September 2018. Year to date, investors have seen a negative 0.21% return, leaving the fund trailing the S&P 500 and the Morningstar US Market Index by 1.27 percentage points and 1.07 percentage points, respectively. In the past 3 years, however, the fund has delivered a 14.45% annualized return, slightly outperforming the S&P 500 at 14.41%. Like the other 4 largest funds in our screen, Vanguard ESG US Stock ETF is passively managed, designed to replicate the performance of the FTSE USA All Cap Choice Index. And number 3, iShares ESG Aware MSCI EAFE ETF. Morningstar category, foreign large blend. Morningstar medalist rating, silver. Morningstar ESG risk rating, above average. And the analyst for this ETF, Zachary Evans. The largest ETF falling under the foreign large blend Morningstar category, and the third largest across our screen overall, is the $9.73 billion iShares ESG Aware MSCI EAFE ETF. Open to investors in June 2016, this silver medalist has returned an impressive 16.7% year-to-date, against a 5.22% return for the Morningstar Global Markets Index. The fund's 3-year annualized return is 11.3%, trailing the Morningstar Global Markets Index by 0.42 percentage points. In keeping with the remainder of the 5 largest funds in our screen, iShares ESG Aware MSCI EAFE ETF is passively managed, tracking the MSCI EAFE Extended ESG Focus Index. And number 4 is iShares ESG Aware MSCI EM ETF. Morningstar category, diversified emerging markets. Morningstar medalist rating, bronze. Morningstar ESG risk rating, above average. And again, analyst Lan and Tran. iShares ESG Aware MSCI EM ETF ranks 4th in our screen with $4.73 billion in assets under management. Launched in June 2018, the iShares ESG Aware MSCI EM ETF has returned 9.74% in 2025, beating a 7.54% return for the Morningstar Emerging Markets Index. Looking over a longer horizon, the fund's 3-year annualized return is 4.62%, trailing a 5.46% return for the Morningstar Emerging Markets Index. This bronze Morningstar medalist is passively managed, seeking to replicate the performance of the MSCI Emerging Markets Extended ESG Focus Index. And finally, number 5, iShares ESG MSCI KLD 400 ETF. Morningstar category, large blend. Morningstar medalist rating, bronze. Morningstar ESG risk rating, high. And the analyst is Ryan Jackson. Rounding out our list of the top 5 largest U.S. domiciled ESG equity ETFs is iShares ESG MSCI KLD 400 ETF with $4.5 billion in assets under management. Incepted in November 2006, it is the oldest fund among the 5 largest in our screen by nearly a decade. Yet to date, the DSI, this fund, has returned negative 0.88%, trailing the S&P 500 by 0.18 percentage points, but outperforming the Morningstar U.S. Market Index by 0.02 percentage points. This bronze Morningstar medalist passive fund seeks to replicate the performance of the MSCI KLD 400 Social Index, which incidentally, and I'm adding this point, goes back to something like the late 1980s or around 1990, that particular social index. So, end quotes. Now, another article by Hannah Hummel on Morningstar.com. This one is titled 2 Top Undervalued EV Stocks to Watch Now. Again, some brief quotes on each stock by her. Morningstar data as of May 13, 2025. 1. Analog devices. Morningstar Economic Moat Rating, wide. Price to fair value, 0.93. Morningstar rating, 4 stars. Sector, technology. Analog Devices is a leading global manufacturer of mixed signal and analog chips. Analog chips function by translating environmental conditions like temperature and sound into viable digital signals. The company supplies chips to a diverse range of end markets, including automotive companies, as well as manufacturers of medical devices, robots, and industrial machinery. In both fiscal 2022 and 2023, the adjusted operating margin for the firm hit 49%, though it has since declined to 41% in fiscal 2024. Morningstar anticipates, however, that the adjusted operating margin for analog devices could reach 50% by fiscal 2028, bolstered by a projected 9% average annual growth in sales. Considering Morningstar's current fair value estimate of $245 per share, projections for fiscal 2025 are in line with a 3% free cash flow yield. At a recent $226.68 per share, Analog Devices was trading at a 7% discount to Morningstar's fair value estimate. And number 2 is NXP Semiconductors. Morningstar Economic Moat Rating, wide. Price to fair value, 0.76. Morningstar rating, 4 stars. Sector, technology. NXP Semiconductors is a prominent player among automotive semiconductor manufacturers. Like Analog Devices, the firm's expertise is not limited solely to automotive chip making, as it also sells to the mobile, communications infrastructure, and industrial markets. Moreover, through enabling near-field communication, or NFC, NXP Semiconductors powers the mobile wallet offerings of multiple high-profile clients, the likes of which include Google and Apple. Although the firm lost 5% in revenue in 2024, and Morningstar models an 8.5% decrease in revenue this year amid tariff-related market challenges, Morningstar anticipates a recovery by 2026. Indeed, Morningstar models indicate that NXP Semiconductors revenue could increase 6% in 2026 as EV designs call for an increasing proportion of chips embedded into their systems. Morningstar's fair value estimate for NXP Semiconductors currently sits at $280 per share, indicating a 6% free cash flow yield for 2025. At a recent $212.40 per share, NXP Semiconductors was trading at a 24% discount to Morningstar's fair value estimate. End quotes. My third article brings us back to a favorite sector for ethical and sustainable investors. The article is titled 3 Alternative Energy Stocks to Watch Amid Escalated Tariff Uncertainty, and was found on Zacks.com and is by analyst Apahita Dutta. Her article is a comprehensive review and analysis of the industry and a few of its leading companies. Here's some quotes by Ms. Dutta from her article, and we've often had articles reviewed and featured here by Ms. Dutta. So, quote, "The alternative energy industry has outperformed its sector as well as the Zacks S&P 500 composite over the past year. The stocks in this industry have collectively surged 41.9% in the past year against the oil's energy sector's 9.8% decline. The Zacks S&P 500 composite has gained 11.7% in the same time frame." So starting one, Ormat Technologies, based in Reno, Nevada, the company is primarily engaged in the geothermal energy power business. On May 27, 2025, Ormat Technologies announced a $62 million hybrid tax equity partnership with Morgan Stanley Renewables to support its Lower Rio and Arrowleaf energy storage and solar projects, expected to be operational by the end of 2025. This innovative financing will help Ormat monetize $160 million in tax benefits in 2025, boosting profitability and supporting its long-term energy storage growth strategy. The Zacks consensus estimate for the company's 2025 sales implies an improvement of 8.4% from the previous year's estimated figure. The stock boasts a long-term, 3 to 5 years, earnings growth rate of 10%. The company currently carries a Zacks rank number 2. That's a buy. 2. Standard Lithium. Based in Vancouver, Canada, Standard Lithium is a technology and lithium development company. Its flagship project is located in southern Arkansas, where it is engaged in the testing and proving of the commercial viability of lithium extraction. On May 29, 2025, it was announced that Smackover Lithium a joint venture between Standard Lithium and Equinor, has secured AOGC approval for a 2.5% lithium royalty rate for Phase 1 of its Southwest Arkansas project, marking the first such approval in the state. This milestone sets a regulatory precedent and enhances Standard Lithium's pathway to commercial production by 2028. The Zacks consensus estimate for Standard Lithium's 2025 bottom line is pegged at a loss of 8 cents per share, suggesting a solid improvement from the year-ago quarter's reported loss of 13 cents. The bottom line beat the consensus estimate in the last reported quarter. Standard Lithium currently carries a Zacks rank number 2. And number 3, Bloom Energy. Based in San Jose, California, the company generates and distributes renewable energy. On April 30th, 2025, Bloom Energy posted its first quarter 2025 results. Revenues of $326 million reflected an increase of 38.6% year over year. Bloom Energy's gross margin was 27.2%, reflecting a 110 basis points improvement over last year's reported figure. The stock holds a long-term earnings growth rate of 24.4%. The Zacks consensus estimate for 2025 sales implies an improvement of 19.3% from the previous year's reported figure. The company currently carries a Zacks rank number 3 hold. End quotes. Now more articles of interest from around the world for ethical and sustainable investors. 1. Title: Best Natural and Organic Food Stocks to Keep an Eye On in 2025 on finance.yahoo.com. Now this is updated by Sumat Singh of Zacks. Original article featured in my podcast, The Low Carbon Stocks for Sustainable Investors. 2. Title: 5 Best Sustainable Investment Platforms for UK Investors on moneymagpie.com by Ruby Lerom. 3. Title: Triodos Investment Fund earns rare perfect score on financialnews.co.uk by Danielle Trigg. 4. Title: Triodos Bank UK recognised as ethical best buy for investment funds and stocks and shares ISAs on and by ffnews.com. 5. Title: Top 10 Sustainable Supply Chains on sustainabilitymag.com by James Darley. 6. Title: M&T Bank, a top socially responsible dividend stock with 2.9% yield on nasdaq.com by BNK Invest. 7. Title: Top 10 ESG Ratings Providers on sustainabilitymag.com by James Darley. 8. Title: Australian Ethical Investment leads these 3 promising small caps with strong potential on and by simplywar.st/stocks/au. 9. Title: These 3 nuclear stocks should be on your energy radar on oilprice.com by Alex Kimani. 10. Title: There's absolutely massive demand growth ahead for this well-positioned high-yield stock on finance.yahoo.com by Ruben Greg Brewer. 11. Title: Our top-rated ESG ETFs on morningstar.com.au by Simone Modi. 12. Title: How to invest in green bonds on morningstar.com. It lists 6 green bond funds, and it's by Charity Blue and Leslie P. Norton. 13. Title: The 50 Most Sustainable Companies in Europe on corporatenights.com. Introduction by Tristan Bronca. So these are my top news stories with their stock and fund tips for this podcast. More top ESG ETFs and companies. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these deeply troubled times. Contact me if you have any questions. Thank you for listening. I'll talk to you next on June 27th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.